I would like to look two kinds of Estonian taxation. One is about regarding digital nomads, how they can benefit it, and also to a little bit challenge some beliefs which are not correct. And thereafter also I would like to speak a few words about running Estonian company. It's famous among Finns, it's famous among Indians and some other nations. So just to give some basic rules and ensure that nobody from abroad will face troubles in the future. So some basic international and corporate tax rules will be considered. And if you have any questions, then you're welcome to ask, as usually. So, there is some kind of belief that if somebody will get Estonian e-residency, what the government is offering, then it would be like tax-exempt the person in the home country, and it's like almost tax paradise. And I have to challenge this idea. It's not truth, but of course there are several benefits. But before going to the next slide, I would like to ask that, do you know from which country is the largest number of Estonian e-residents in the world? There are like close to 50,000 e-residents, and number one country is what?
Sweden.
No. Finland, correct. I expected that it's some kind of third country like India or some other more distant, but indeed the largest number of e-residents is from Finland. And I think that there is also very practical purpose or reason because many Finnish companies are having subsidiaries in Estonia, and this e-residency helps to really manage the Estonian company from abroad. You can do many things yourself. You don't need to hire somebody locally, and that's, I think, is the main reason why the largest number of e-residents is really from Finland. And this is also reflecting a lot of economic ties between Estonia and Finland. But the e-residency is not something very new. It's since 2014. And it's not some kind of human right. It's more like benefit that the government and the Republic of Estonia is offering, so nobody can demand e-residency. And they make some background check about criminal registries and other things. But if the person seems to be clean and proper, then this e-residency will be given. And this e-residency can be also cancelled any time without giving a lot of reasoning. So it's not right, it's a kind of benefit. And Estonia is the first country in the world who is offering this e-residency to anybody in the world. So it's not limited to European Union or some other like areas, but just anybody who would like to apply is welcome to do it. And that's also the reflection that there are people from 148 countries. So if you think that worldwide there are almost 200 countries, then large part of countries are represented. And there is also online web page where anybody can check that which countries, how many applications, how many declined, and so on. So government is also very transparent regarding these matters. And of course, what's also nice that some really like high names are received this Estonian e-residency. Some time ago, I think maybe months ago, I saw a picture where Estonian Prime Minister was handing over e-residency certificate or this plastic card to Bill. Okay, it was actually to Bill Clinton, but also there are several other names like Angela Merkel and also Bill Gates and different names. So I don't know how much they use this digital identity, but at least they have been provided with this, also part of good marketing. But now if we come to taxation matters, then this digital ID is not maybe so tax efficient, but at least you will see what it gives and what it does not. So one point is that Estonia is not going to tax the income of those e-residents. So if they are not doing any business, having any income in Estonia, then they don't have to report anything in Estonia or tax anything in Estonia. So from this point of view, Estonia is not claiming for their income or taxation of their profits or whatever. So this is tax neutral. They are just receiving access to digital services, but not being able to report anything or tax anything in Estonia. Then the second point is that some people may think that e-residency will change the tax residency of the person, but this is not true, because e-residency is not changing tax residency. The person will still remain tax resident at their home country. If they are living in India, for example, then they may be Estonian e-residents, but still tax residents in India, paying all their worldwide taxes in India according to Indian laws. And the same example goes to any other country. Then if person is not having any business in Estonia, no Estonian income, there is no reporting obligation in Estonia. So that's just a fact and nothing to add, and no risk for the e-residents. Of course, if they make some shady things, then some criminal authorities may be interested about them, but at least if they are like decent citizens in their home country and not earning money in Estonia, then Estonia does not care about their income or their tax status. So e-residence is not a tax concept, but it's more about access to digital services and about digital identity. And that's the most important that any e-resident should consider. And what is also important is that e-residents pay income tax at their home country. So Estonian e-residency is not giving any excuse not to pay taxes at home country. And I'm sure that any country in the world is looking around its tax revenue, and it doesn't matter if somebody is Estonian e-resident. So these are like basic rules about Estonian e-residency. Once again, it's a digital identity. It gives access to various digital services like digital signature, and really makes helpful to manage a company in Estonia. I think that in the future, where the European digital market and digital signature and those matters will be more harmonized, then probably this is also a really good access point for people from third countries to access EU services and EU all kind of databases and whatever. And maybe some practical examples why some people from third countries are needing these e-residencies to get access to different European or American services like PayPal, Amazon. So if somebody is outside of OECD and European countries, then usually they don't have access to many like digital services. And this Estonian e-residency is helping them to access those services. So this is the problem that Estonia is trying to solve for people from third countries. Some rules for digital nomads, what they have to consider about taxation, and this is not Estonian specific, it's more like worldwide best practice of international taxation. So at first, usually home country wants to tax the worldwide income of any person. So whatever country the income has been created, the home country is willing to tax. There are a few countries who are not taxing based on residence, the place where the person is living, but based on citizenship. For example, United States is such a country who says that whoever is US citizen or holds green card must report US taxes and also get some tax-exempt income. But in most of the countries, taxation is only based on the place of residence, where the person really lives, where is his permanent home. So e-residence is not changing permanent home, it's not changing the tax residency. And what is the country of tax residency? As mentioned, that at first it's the country where the person lives, where it's like family, cat or dog, or some skiing equipment or whatever, golf equipment, doesn't matter. So which is the country where the person considers as the main home. And another usual rule in the international taxation is this 183 days rule, that if anybody stays in another country for more than 183 days, then the person becomes tax resident of this other country. So then it doesn't matter if there is home or not, but just the number of days is counted. And if there is tax treaty between those two countries, then it gets more complicated, and tax treaty provides several tests that must be checked to decide which country is the country of residence of the person. And all other foreign countries, according to international taxation rules, may tax only the income which is sourced in that other country. That meaning that if somebody is e-resident, being tax resident in Finland or whatever other country, then if the person receives, for example, interest or dividend income from Estonian company, then this may be taxed in Estonia. But what is good news, what you will see in next slides, is that Estonia doesn't want to tax it at all. So the only country who will tax this income is the home country. And I have to also say that some countries, and these are especially countries in the North America, Canada and the United States, but maybe other countries as well, not so common maybe in Europe, but some countries tend to tax income of foreign passive corporation. So if somebody is establishing as e-residence Estonian company, using it for some kind of investment activities, then this investment income may be taxable at the level of the natural person in home country. So this is a concept to avoid passive foreign holding companies. So this is definitely some kind of home country rule that anybody who is thinking about Estonian e-residency and Estonian companies should consider to avoid like expensive tax consequences at home country. Now, if we come back to Estonian tax system, then few benefits that Estonia is offering to natural persons. The general idea of Estonian tax system is that as a small country, or even from the number of people, I would say very small country, 1.3 million people, then the tax policy is to keep tax system as simple as possible and to avoid any exceptions. And really straightforward, and also the purpose of the country is to make it as easy as possible to pay taxes. So you can use different digital solutions for at least 10 years. 95% of personal tax returns are all online, which means that nobody almost is submitting paper tax return anymore. These are pre-filled, which means that you just review and click. So really the tax authority and Minister of Finance have made a lot of effort to make it really easy to pay taxes, because this is also helping tax compliance. And this means also that regarding foreigners and also local people, there are not too many taxes and not too many difficulties to comply with tax laws. And one basic rule which is really good is that all dividend income in Estonia is tax exempt, which means that any dividend from any company is tax exempt as a rule. Of course, if it's an offshore company, then it's taxable. And there will be some changes also coming from next year, that if the company has been taxed at a very low level, like Estonian company, then there may be some additional 7% paid by the shareholder. But basically, the dividend income is tax exempt. And I would say that this is rather big exception even in Europe, because if you look all neighboring countries, then all countries claim also tax money on dividend income, which is not the case in Estonia, and it has been always this way. No gift or inheritance taxes, so any transfers of assets between generations or within the family or friends or whatever is tax neutral, no tax consequences. Personal income tax is flat, 20%, so everybody pays the same 20% and does not depend on size of the income. And as I mentioned, dividend income is not taxable at all at the level of shareholder. And there is also a special vehicle given for resident taxpayers. It's called investment account, which means that you can buy through this investment account different securities, you can sell those, and you don't tax this investment income until you really use it for other purposes. Basically, if you keep this money running in investment account system, then you can buy different shares, bonds, whatever, tradable assets, and all income from this is tax exempt. And the taxation is postponed until the moment you will take out this money for personal consumption. You want to buy a house or make a trip then to some nice location, then if you use this money, then it is taxable, but not if you keep it for investment purposes. And all those benefits are only for Estonian physical tax residents. So that's the idea. So if somebody is e-resident, then unfortunately does not care about those tax benefits because home country probably would like to tax dividend income. Probably there is progressive taxation, or in some countries maybe even smaller tax rate for natural persons. So really for EU residents to enjoy the real benefits of Estonian tax system, they have to become Estonian natural residents. So this is the rule of taxation. I also made a list of those tax treaties that Estonia is having. Currently 59 tax treaties. Unfortunately, no tax treaty with any African country, but many countries are covered, and usually those tax treaties also give benefits for those EU residents if they receive any Estonian income, or if they establish Estonian company, or then it's useful to know which countries have tax treaty with Estonia. And also vice versa, which is always important regarding tax treaties, is that these regulate also information exchange between tax authorities of those countries. So if somebody is Estonian e-resident and creates a company or a bank account and does not plan to pay taxes at home country, then those are the countries which can ask information from Estonian tax authorities about the specific citizen of their country. So, any questions about taxation of digital nomads in Estonia? Okay, then I will speak a few words about the taxation of Estonian company, because probably for startups, for any entrepreneurs, this digital identity or Estonian e-residency is just some kind of gate to the next steps, which is most likely to establish Estonian company. Establishing of Estonian company can be done online if this is a company owned by natural person. It's possible to do theoretically within 15 minutes. I've tried, I've used usually like 30 or 60 minutes. So this is, you have to be really very skilled and know all answers to make it within 15 minutes. But it's really like quick process. And if you make the company without any paid-in share capital, then I would say that after 1 hour you have the company registered and fully operating. Of course, bank account opening can be more tricky. Because of AML rules, anti-money laundering, Scandinavian banks are really becoming more and more careful. And we have even seen in Estonia this situation that banks are even closing accounts of some e-residents because they are really worried and scary. So nowadays the establishment of the company is really easy task. But to get the bank account, this is really depending how the bank sees the person, and you never can predict it. Yes?
I have an experience that I faced like really a major investigation, asking, if I would make my taxes here and there, such kind of that the atmosphere was very, very unpleasant. And of course, my issue is that I have a bank account in Finland with Danske, which of course is notorious. Mm-hmm. And then the fact that they charge you 250 euros just for opening the bank account, I don't buy that.
Yeah, I agree that within a year, the banks really have become really careful because they have been punished a lot. All compliance rules in all Europe have been increased, resulting that really banks are charging more for bank account opening for non-residents, and also they are more careful, so really choosing whom to open an account or not. Of course, there is also a solution that currently Estonian Republic is working with is to really give opportunity to open Estonian company without Estonian bank account. Which means that if this is the problem that banks are not willing to open bank accounts for non-residents, because usually to have large proportion of accounts of non-residents or even deposits of non-residents is usually some kind of red flag for the bank. And this was the case of those names which have really faced money laundering accusations. So this is some kind of solution that you don't need to open local bank account. You can open the bank account at your home country, where most likely you can get it more easily. So this is under the process, I would say, to really solve this issue. Okay, now some words about taxation of company, and especially Estonian company. So if company is established, then most important is that the biggest tax benefit in Estonia is that corporate income tax is postponed until the moment you distribute the profit. So I'm always having some struggle that when I have to fill all kind of questionnaires about the Estonian tax system, then they're asking what are R&D incentives or what are different incentives for different industries. I have to say that there are no specific incentives. The only incentive is the corporate income tax system, that you really pay corporate income tax when you stop investing, when you start using this money for whatever private purposes or really like distribute as dividend. So this is the basic idea of the Estonian corporate income tax, that government is not willing to tax income earned, but it's really would like to tax when income is taken away from the business. So that's the basic idea. And if company is going to distribute profit, then of course the tax rate 20% nowadays is some kind of European average. So not very beneficial, not high. In France or some other countries also you can face tax rate over 30%. But anyway, 20% is payable, and the idea is that the Estonian company is not tax exempt company, it's not some kind of offshore company, you just pay the corporate tax if you start distributing the profits. And it's also good for those startups who are earning already some profit. If they're just burning money, then of course this does not help. But if they are already like earning money, making some profits, then they can use this profit to invest and expand and establish companies in other countries and really grow their business. So that's the basic idea. If you're in the growth mode, then you don't need to pay corporate income tax. And if you start paying dividends, if you start enjoying those benefits that you're created with your company, then you start paying Estonian corporate income tax. And from next year, there is also option to have reduced the corporate income tax rate 14%. So this is also trying to motivate companies to distribute more profit on more regular basis. So for regular profit distributions is provided 14% of corporate income tax. And for digital nomads and everybody who is from abroad, the biggest risk is that if they have Estonian company, yes, indeed, in Estonia, they don't have to pay corporate income tax if they don't distribute dividends. But if they are operating this company in somewhere abroad, then they may have permanent establishment. And all countries try to tax permanent establishment located on their territory. So for example, if somebody from Finland is running Estonian company and being the only like employee and owner and board member and doing, for example, some digital marketing services worldwide, but staying at home in Finland, then most likely Finnish tax authority would like to say that yes, there is permanent establishment in Finland. All income earned by the Estonian company is earned by the permanent establishment and should be taxable in Finland. And that's a normal rule of international taxation, and it's also agreed in the tax treaty. And the same goes also about third countries, that somebody like running some shop in India, for example, having Estonian company, then most likely India would like to say that yes, here is permanent establishment, please pay all Indian taxes and we're fine. So this is the biggest risk what anybody who is considering using Estonian companies should consider, that if permanent establishment will be created at home country, then this permanent establishment is subject to all local taxes at home country, even if this is Estonian company. So some other rules, basic rules of Estonian corporate income tax system, which are maybe useful if you think about having some holding company in Estonia or whatever in your structure. So there is no income tax on dividends received from qualifying subsidiaries, meaning that if Estonian company is having subsidiaries somewhere else in Latvia or in some other country, whatever, then this income received from subsidiary is just passing through the Estonian company without any additional taxes. So this is the basic rule of also European corporate tax environment, that there is no tax if a subsidiary is paying dividends and the parent company is redistributing this profit. And the same goes about profit of permanent establishments. So if Estonian company has permanent establishment at the home country of its shareholder, for example, then this income is not double taxed. That's the most important, that there is no double taxation. What's also rather exceptional is in Estonia there are no thin capitalization rules. This means that usually countries try to say that you have to put so much money into equity and so much money into you can give as a financing, as shareholder loan. In Estonia currently there are no such rules, which means that, for example, you can establish a company with 10,000 euros in equity and give 10 million euros as a loan. So this is fair, this is allowed, it's okay. And also, as we are having really simple tax system, cash-based corporate income tax, then there is no tax depreciation, no tax loss carry forward or whatever those concepts that are very common in other countries which are having traditional corporate income tax system. And if Estonian company is paying dividends, distributing its profit, then yes, there is corporate income tax, but there is no additional withholding tax, which is also very common in other countries. And if Estonian company is paying interest to non-residents, then there is no withholding tax at all. So interest income goes out from Estonian company without additional taxation. There are some limitations if transactions are made with offshore companies from low tax rate territories, then usually there are some taxes you have to pay, like you distribute dividends. So that's how Estonia is trying to make tax avoidance using offshore companies, if not impossible, then at least very costly. We have transfer pricing rules. We can see that tax authorities are more and more monitoring those transfer pricing matters, especially in respect of large Nordic corporations operating in Estonia, because anybody understands that if somebody has invested into country, then at some stage the shareholder would also like to take out the profit. And if the profit creates obligation to pay taxes if you distribute it, then Estonian tax authorities are really carefully looking those loans from Estonian subsidiaries to Nordic parent companies. I've been, I would say that maybe like 10 times during last year with tax authority with some really known international companies who have given loans, and tax authorities challenging that maybe this loan is not loan from Estonia to whatever, Finland, Sweden, Norway, but maybe it's rather profit distribution. So tax authorities are monitoring those deemed profit distributions, which should be taxable. What is maybe downside of Estonian corporate income tax system is that if Estonian parent company or holding company is going to sell subsidiary, then this is not tax exempt. In many countries in Europe, I would say in most of the European countries, there is given exemption to sale of subsidiary. In Estonia, that's not the case. But of course, the idea is that you don't pay any income tax until you distribute the profits. So it's postponed taxation, but no tax exemption like in Finland. And maybe somebody may say also that how stable is the corporate income tax system? Then of course nowadays we have to say in the politics that nothing is stable, or you can predict anything almost. Who could think about Brexit a few years ago, or maybe 5 years ago is more proper to say. Then we don't know what the future may bring. But of course, if you look at the history, then the current system has been in place since 2000. And of course, there have been some fine-tunings, but basically the corporation tax system has been almost 20 years in the same shape and logic. A few words also about the tax changes in Estonia regarding corporate income tax from next year. So it's also an important topic for those companies who are already like profit making and who would like to distribute profit. Then if they make regular profit distributions, then they will get a reduced tax rate. If they are redistributing the same amount 3 years in a row, then they will get corporate income tax rate 14%. So this is some kind of benefit which government is giving to motivate more regular profit distributions for those companies who don't need the cash and profit and who are not anymore in the growth mode. So probably not very important for startups, but for anybody other who is using Estonian company to do some business. Stock options, startups like stock options as well. So that's also important topic, that the Estonian company can provide the stock option programs. And if the period between granting and vesting is at least 3 years, then those stock options are not taxable at the level of employer and also not taxable at the level of employee until the employee will sell the shares and get like real personal capital gain. And this is the most important for anybody who's using Estonian company, that the stock option program must be really designed in a proper way. The 3 years rule must be followed. And if it's not followed, then it's rather heavily taxed, all stock options which are exercised before 3 years from granting. So this is just a matter that everybody needs to consider in advance, because later there is nothing to do and you cannot demotivate your key employees as well. A few words about tax audits. As the country is small, the tax authority is also small, which means that they really need to be very focused and very smart. And for many years already, they don't make any random tax audits. They are basing all their tax audits on really like data analytics and all kind of tax returns. Annual reports in Estonia are digital, which means that all this data is really like machine processable, and tax authorities are using this opportunity heavily, that really they can take all data from the commercial register about annual reports. They can analyze this data with machines and really find out that all kind of deviations and then pick out those tax audit targets. So this is how it's happening. So there are many Estonian companies who have been never audited by tax authority, and there are also those who are more monitored if there is some kind of risk assessment related to the company. And as in any European country, then Estonian tax authorities also are considering very much the substance over form rule, that all kind of artificial arrangements, artificial structures are challenged, and the main substance will be considered for tax purposes. So if somebody has Estonian company or plans to have Estonian company, then you really need to have real substance in the transactions. What the Estonian tax authorities are not challenging is the residency of the Estonian company, meaning that they don't care how much substance some foreigner has in Estonian company in Estonia. And this is rather the matter which is challenged by the other foreign country. If they say that, come on, that this Estonian company is just address in a building where are some more 5,000 companies, you don't have any like real substance in Estonia, then this may be a tax risk in home country, but not in Estonia. Estonian tax authorities, they don't care. Is there more substance or less substance in the company in Estonia locally? And also who care is our banks, because banks also want to see that there is some real business around the Estonian company if they are going to open a bank account. And a few rules that any startup should look in international taxation. These are not Estonian specific rules, but just what should be considered at first: payroll taxes. Usually payroll taxes are payable in the country where the work is performed. So that's the basic rule in international taxation. This also means in the context of Estonian company that if there is Estonian company but people are working for this company abroad, then no Estonian payroll taxes are paid at all. So just basically the salary goes out without any Estonian taxes. And this is normal because payroll is taxed in the place of work. In case of digital nomads, then of course the question is which is the place. If they are location independent, then they may work in different countries, which may result that no country will tax it, but it may also result that several countries would like to tax this income. So this requires more like thinking and planning in advance. If the person is not employee but board member, either like management board member or supervisory board member, then in the international taxation, usually this income is taxable by the country of residence of this corporation. So if you speak about the Estonian company, then board member salary is taxable in Estonia, even if the board member is not living in Estonia, not even visiting Estonia ever. So board members' remuneration is always taxable in the country of the establishment or registration of the company. Social security taxes are harmonized in Europe, which means that there is a basic rule that social tax is payable only in one country at once, and not in several countries. And this is really important to ensure that the person is receiving this social benefit from some specific country, and that's why also the payments of social security payments are related to this very same country. Corporate income tax, the general rule is that most of the companies tax annual profit. They take away the tax part of the profit and remain to the entrepreneur. Estonia, as we discussed, is not taxing annual profit, but only the distributed profit. Dividends, according to some EU directives, parent subsidiary directive, then dividends which are payable by subsidiary to parent company are not taxable. That's a European-wide rule. And it should be applied in all European countries, and in addition also in European Economic Area, meaning like Iceland, Liechtenstein and Norway. And then VAT and customs taxes, I can speak about Europe, nothing else, because there are countries where there are no VAT at all, or maybe some different customs taxes, but usually you have to consider that in Europe, VAT and customs taxes are very harmonized. VAT rates are different, there are some exceptions, some differences, but in general, VAT is rather harmonized in Europe, and also customs taxes are fully harmonized. What concerns corporate tax, corporate income tax and personal income tax, then this is not harmonized in Europe. There are some main rules that this cannot be discriminative, it cannot affect free movement of people, capital, whatever services. So there are like anti-discriminational provisions in European laws, but as a rule, every country can decide how they design the personal income tax system or how they design corporate income tax system, unless it is going against some European values or some corporate income tax directives, which are in very specific areas like dividends, interest payments, some R&D license fees, but in general it's a subject matter of the country. And of course I think that within years coming, we may see that also corporate income tax will be more harmonized in whole Europe. And this is the process what several members of European Parliament are pushing on. So this was my brief presentation about Estonian e-residency, and the question was whether it also is affecting taxation of the person, and the answer was that no, e-residency is not tax concept, but it's more like giving access to digital services, digital signature and all other digital identity. And we spoke also about using Estonian company, and we learned that it's not offshore, it's not a tax-exempt company, but just taxation of profit is postponed until there is real distribution of profit. So thank you, and if you have any questions, I'm happy to answer either publicly or privately.